Okay, so you know how much I love a good stock tip.
Yeah.
Like, who doesn't? But I recently came across this idea that's really got me rethinking my whole approach to trading.
Oh, I'm intrigued. What is it?
It's all about market conditions.
Ah, market conditions. That's something so many traders, especially new ones, they overlook. They get so fixated on finding that like magic stock, the one that's going to make them rich.
Right, the golden ticket.
Exactly. But they forget that even the most promising stock can tank if the overall market conditions aren't right.
Yeah, it's like it doesn't matter how great your boat is if you're sailing straight into a hurricane,
Yeah,
you're going to have a bad time.
that's a perfect analogy. And that's exactly what we're diving into today.
And what's the inspiration for today's deep dive?
Today's deep dive is anchored by the importance of market conditions in trading success.
Ooh, that sounds like it gets right to the heart of the matter.
It really does. In fact, there's this quote that really jumped out at me. Regardless of a trade's potential, it's difficult to prosper if the market conditions are unfavorable.
Whoa. See, that's what I'm talking about. That's a real wake-up call. I feel like I've been so focused on finding the right stock, I haven't been paying nearly enough attention to I don't know, the market weather.
I like that, market weather. And you're right, it's like you wouldn't go sailing without checking the forecast, would you? You need to know if you're in for smooth sailing or choppy seas.
Okay, I'm liking this analogy. So, walk me through this market forecast then. What are the big weather patterns we need to be watching?
Well, your source breaks it down into four key factors that influence market conditions.
Okay, hit me with them.
First up, you've got the overall market trend.
Okay, so like, are we talking bull market, bear market?
Exactly. Is the market charging ahead like a bull in a china shop? Or is it lumbering downwards like a bear?
And then there are those times when it just seems to be meandering along, no real direction.
Right, that's your sideways market, kind of like it's stuck in a lazy river.
Okay, I can picture that. So why is it so important to understand this overall trend?
Well, because it sets the stage for everything else. Think about it. If we're in a strong bull market, even an average stock might get swept up in that upward momentum.
So even if it's not the most amazing company, it could still see some gains.
Exactly. But in a bear market, even the best companies, the ones with solid fundamentals, they might struggle to stay afloat.
So even if you found a great company, bad market conditions can really drag it down.
Absolutely. It's like you might be an amazing surfer, but if the ocean's flat as a pancake,
You're not going to catch any waves.
right. Now, our next weather pattern to watch is economic indicators.
Oh boy, here comes the technical stuff.
Now, I know this might sound a little dry, but trust me, it's crucial, and we're going to connect these to the real world.
All right, you've got my attention. Give me the rundown. What are the key economic indicators I should be watching?
Well, we're talking about things like GDP growth. Is the economy expanding or contracting?
Right, makes sense. What else?
Then you've got the job market, are businesses hiring, or are layoffs on the rise? And of course, we can't forget about inflation and interest rates.
Yeah, those seem to be on everyone's minds these days.
And for good reason. These aren't just abstract numbers for economists to debate. They have a very real impact on how confident people feel about spending and investing, which ultimately moves the markets.
Right, because like if everyone's feeling good about the economy, they're probably spending more, businesses are doing well.
Exactly. It all boils down to sentiment, right?
Yeah.
And how that translates into actual market action. Now, here's where things get even more interesting. You see, even within a bull market, where the overall trend is up,
Not all stocks are created equal.
you got it. They don't all move in lockstep. And this brings us to our third factor, sector performance.
Yeah, so even if the tide is rising, it might not lift all boats equally.
Exactly. I love that. Our source actually uses the example of tech stocks versus utilities. So imagine you've got a booming economy. Investors are feeling bold. They're looking for those high growth opportunities.
So they're going to be drawn to the tech sector, even if it's a bit riskier.
Precisely. But then let's say the economy starts to sputter a bit. Investors get nervous. They start looking for safer havens.
And that's where those utilities come in.
You got it. They're reliable. They pay dividends. People still need their electricity no matter what the market's doing.
So even within a bull market, you could have some sectors that are lagging behind, maybe even taking a dip.
Absolutely. That's why understanding sector performance is so crucial. It's not enough to just look at the overall market trend. You got to zoom in, see what's happening within specific industries.
Okay, so that's market trends, economic indicators, and sector performance. What's the last piece of our market weather forecast?
Well, this one's a bit trickier. We're talking about geopolitical events.
Oh boy, yeah. Wars, elections, natural disasters.
You nailed it. Those can be tough to predict.
That's putting it mildly. But we've all seen how those kinds of events can send shockwaves through the market.
Exactly. Remember back in early 2022 when Russia invaded Ukraine? The market went haywire,
Especially energy stocks, right?
big time, because suddenly there was all this uncertainty about global energy supplies. No one knew how it would all shake out.
And then there are those totally unexpected events that no one could have seen coming.
Oh, you mean like that whole ship getting stuck in the Suez Canal thing?
Exactly. I mean, who could have predicted that?
Nobody. The point is, global events, they can throw a real wrench into even the most well-thought-out trading strategy.
So it's like you can analyze the market trends, you can pore over the economic data, but
A
then...
volcano erupts on the other side of the world and throws everything into chaos.
Exactly. So how do we even begin to account for that in our trading?
Well, you're not going to be able to predict every curveball, right? But staying informed is key. Knowing what's happening in the world and how it might impact the markets.
So we can at least be prepared to adjust our sails when those unexpected storms hit.
Exactly. Now, we've covered a lot of ground here talking about these big picture market forces.
Right, but how do we actually put all of this knowledge into action? How do we take those 4 factors and use them to make smarter trades?
Well, the good news is our source provides a really practical roadmap for that, too. They outline 4 steps you can take to align your trading with market conditions.
Okay, now we're talking. Lay out those steps for me.
All right, so let's say you're feeling bullish on a particular stock.
Ooh, let's say it's a retail stock. They got a hot new product. Their online sales are through the roof.
Okay, great. So you're ready to jump in, right? But before you do, step 1, as our source emphasizes, is to take a step back and analyze the market indices.
So we're talking about the S&P 500, the Dow Jones Industrial Average.
Exactly. What are those telling you about the overall market sentiment right now?
So are we in a bull market or a bear market? Is the trend up or down?
Exactly. Because remember, even the best stock can get caught in a riptide if the overall market is heading south.
Right, so even if our hypothetical retail company is killing it, if the broader market is struggling.
That's going to create some headwinds. It's like trying to swim upstream.
Okay, so let's say I pull up the charts and I see that the S&P 500 has been on a bit of a downtrend lately.
Okay, so not a full-blown bear market yet, but definitely some weakness.
Right. So already some yellow flags with this retail stock idea. Like, even if the company itself is doing well, it's fighting against the current.
Precisely. That's why this first step is so crucial. It's about getting that big picture context. Now, a downtrend doesn't mean you completely abandon ship on every trade idea, but it does mean you proceed with caution.
Right. Got to do your due diligence.
Exactly. Okay, so step 2, remember those economic reports we talked about?
Yeah, time to put on my economist hat. What am I looking at here?
Well, since you're interested in retail, you want to keep a close eye on anything related to consumer spending.
Okay, makes sense.
So things like retail sales data. Are people out there shopping or are they tightening their belts?
Right, because if no one's spending money, that's not good for retail.
Exactly. And don't forget about inflation and interest rates. Those can have a big impact on consumer behavior.
Because if everything's more expensive and people are worried about their debt...
They're going to think twice about buying that new gadget or that trendy outfit.
Okay, so let's say, hypothetically, I'm seeing reports that consumer confidence is down, spending is slowing.
Well, that would be another yellow flag for your retail trade.
Starting to see a theme here. 2 steps in, and I'm already getting cold feet. But that's the whole point, right? Better safe than sorry.
100%. Now, step 3 takes us even deeper into sector-specific analysis. Because remember, even in a booming market, some sectors might be lagging behind, and vice versa. Even in a downturn, some sectors might hold up better than others.
Okay, so it's like even if the overall market weather is kind of gloomy.
There might be some sunny pockets.
I like that. So how do we size up the retail sector specifically?
Well, you can look at those retail sales figures we talked about. Are they up or down? You can also look at retail sector ETFs.
ETFs, those are like baskets of stocks, right?
Right. So you can see how the entire retail sector is performing, not just individual companies.
Got it. And then, of course, there are always those earnings reports and news coming out from major retailers.
Exactly. Those can give you valuable clues about consumer behavior, what's selling, what's not.
Okay, so if I'm seeing retail sales are slumping, the retail ETF is down, and some big-name retailers are issuing warnings about a slowdown.
That's a pretty good indication that the retail sector is facing some headwinds.
And in that environment, even a company with a killer product might have trouble making a splash.
Exactly. Okay, so we've covered a lot of ground here. We've talked about analyzing market indices, digging into economic data, and evaluating sector trends. What's the final piece of the puzzle?
All right, hit me with it.
Step 4. Keep an eye on those geopolitical events.
Right, the wild cards.
Exactly. Now, we can't predict when the next conflict is going to erupt or when the next natural disaster is going to strike.
Unfortunately.
But we can stay informed. Make it a habit to keep up with global events and think about how they might impact the markets.
Okay, so no need to become a geopolitical expert overnight.
Right, but just be aware.
Okay, that makes sense. So let's bring it all back to our hypothetical retail stock. We've got a market that's on a bit of a downtrend, the economic data for consumer spending is looking shaky, and the retail sector as a whole is struggling. What's the verdict?
You know, in that scenario, I'd say proceed with caution.
Probably not the time to go all in.
Exactly. The market conditions just aren't in your favor. It might be wiser to wait for a more opportune time to make your move.
Wow, this has been eye-opening. I feel like I was so focused on finding those undervalued gems that I totally underestimated the importance of market conditions.
And you're not alone. It's so easy to get caught up in the excitement of a particular company or a hot new trend. But understanding market conditions, that's what separates the amateur investors from the pros.
It's like having that extra layer of analysis, that big picture awareness that can make all the difference.
Exactly.
This has been incredibly helpful. I feel much more prepared to navigate the markets now.
I'm glad to hear that. Remember, knowledge is power when it comes to trading. The more you understand about market conditions and how they can impact your investments, the better equipped you'll be to ride those waves of opportunity.
I love it. And on that note, we'll wrap up this deep dive. We hope you found it valuable, and we'll see you next time for another exciting exploration of the knowledge that matters. Happy trading, everyone!